Welcome back to Insightful Value, where we spotlight companies flying under the radar. And today, Universal Health Realty is flashing on our screen with a stock price that's trading lower than expected. Is this a value gem or a warning light? This review is for informational and educational purposes only, and not financial advice. If you love clear, smart breakdowns, hit that like button and don't forget to subscribe. Universal Health Realty Income Trust is a real estate investment trust specializing entirely in healthcare-related properties, from acute care hospitals and behavioral health facilities to medical office buildings and child care centers. It owns over 70 properties across 21 states. Lately, UHT's share price has dipped into multi-week lows, hovering in the high $30 range. Despite that, the company remains a dividend standout. Its yield is now around 7.6%. Well above many peers, and UHT has raised its dividend for 40 consecutive years. That reliability is rare in any sector. From a value angle, the income stream is compelling. That said, the payout ratio based on earnings is over 220%, though it drops to a more sustainable approximately 87% when measured against cash flow. UHT also reported a modest Q2 result. Funds from operations grew slightly, but margins feel some pressure from higher borrowing costs and softer property income. Risks are real. Rising interest rates squeeze borrowing costs for REITs and can hurt property valuations. Tenant performance and lease rollovers in healthcare spaces may lag amid economic shifts. As a REIT focused on human service facilities, capital expenditure demands and regulatory changes could hit margins too. So, why might someone consider UHT now? Because even with a low stock price, the dividend remains strong and consistent, and a defensive property portfolio, healthcare infrastructure, is still critical no matter the macro environment. On the flip side, if you're concerned about long-term sustainability, the ultra-high payout relative to earnings raises a flag about whether cash flows can keep up. Recovery in the share price likely hinges on stabilizing property income and favorable interest rate trends. If tenants hold up and borrowing costs ease, UHT could see renewed investor interest. Overall, Universal Health Realty offers compelling income in a defensive niche, but not without real execution and macro risks. This isn't a recommendation, just a clear-eyed look to help you consider whether UHT deserves a spot on your watch list. At Insightful Value, we break down undervalued companies in plain language so you can make smarter decisions, whether you're a seasoned investor or just starting. For more on UHT and others that deserve attention, visit InsightfulValue.com. Thanks for watching. Make sure you subscribe and like the video to keep the insights flowing.